Texas homes that took in water and could, for the time being, maybe for a while, could see their valuations drop. That would be probably an understatement, but as much as 60%. The housing expert Tim Rood is not too surprised by that. The question then, Tim, has to be, does it bounce back from that, right?
Hey, yeah. Hi, Neil. How are you?
Very good.
There's no shortage of questions that need to be answered. I mean, the good thing is you've seen Houston. Obviously, Texas has been growing gangbusters over the past 3 or so years. Houston, especially. So, I mean, so we've already had a trouble kind of keeping up with the pace of immigration, if you will, or migration to Houston for a number of good reasons. So there is no shortage of demand there for all of the things that were there in its place. And I would imagine that while there's clearly, catastrophe is not good for any market, there's no doubt going to be recovery probably 2 years and change down the road as you make these reinvestments in the housing stock and the commercial enterprises.
When you say it's 2 to 3 years, right? I mean, I remember after 9/11, I mean, much of downtown New York was considered a real estate ghost town. Not only do people flee there, but they certainly weren't moving in there. Now it's just the opposite. It's as hot can be. In Katrina and in much of the Louisiana area, New Orleans area, people were leery of moving there, and the risks of being there, of course, now much stronger. So we learned that markets that were battered or considered pariahs come back. But again, a lot of that depends on, whether the business returns, usually does, and the interest returns, it usually does. What do you see here?
Yeah, I mean, New Orleans has got a couple of unique features to Houston. Well, one, just in terms of orders of magnitude, right? So you've got Houston. New Orleans is about 1/6 of the size of Houston, and Houston has real industries. I mean, they've had to I think, shut down about 16 refineries or 10 refineries, but there hasn't been any real damage to those refineries, so they expect them to be coming up and going in the near future. But also, you got to remember, New Orleans was like a soup bowl. I mean, the water had nowhere to go, so it hung out a lot longer. Houston is relatively flat. But what you're seeing now is it is going to persist for some time because you have these controlled releases. I mean, so these poor families who have probably lost their job or, and their neighbors have been impacted and they take a deep breath thinking that their houses are safe. Then you have these controlled releases. Next thing you know, they're under, 8 feet of water just to kind of save the greater population.
We've shown a couple of communities that are in danger of that. But one thing I do remember, Tim, and maybe we were talking at the time, but after 9/11, I remember there were some very brave real estate investors who came in and were buying a lot of distressed properties or properties even after the financial meltdown that were given up for dead, and they were the equivalent of vulture investors. They made their money back and then some. I'll just leave it at that. When people judge that, when you see the people who sort of come back in and dip their toes back in markets that look like they're bad or risky markets, what do you look for? An underlying business and industry. In Houston's case, in the Texas economy itself, you have energy and technology and a host of other things that you might not have in some of these other locales. Would that convince you that when valuations get hit 50, 60, 70%, that's overdone?
Yeah, it's going to be interesting to see, because one other thing to think about too, one of the reasons New Orleans was so unique that got hit is they had like generational home ownership. So a lot of these homes were owned free and clear. So they didn't have, what mortgage would require in terms of homeowners insurance and flood insurance. So these things were just decimated. So they took a long time to come out, and these people were so displaced and dispersed. There wasn't a whole lot of infrastructure and there wasn't a lot of industry to bring them back. I think Houston, quite the opposite. It's a lot more affluent. You have legitimate industries that are there. You've already seen infrastructure spending, private investment there. I don't think they'll have any trouble recovering, and it's yet to be determined how big the problem is. Is it going to be 25,000 homes, 50,000 homes, 100,000 homes that have been impacted? That's going to be a big determinant, I would think. And, the sad reality is in real estate, as long as there's ever been real estate to buy, one person's misfortune is another person's opportunity. And
but if homes are physically destroyed or deemed uninhabitable after a disaster of this magnitude, flooded out or destroyed, that they'd have to be rebuilt, that does change the equation a little bit, right?
Well, the hard thing too, Lou, is, I mean, Neil, sorry, is labor, right? I mean, so
Right.
you already had 400,000 open, construction jobs out in the marketplace. Houston, again, has been growing gangbusters, so they didn't have a lot of capacity there to build. There's not enough sheetrock in the planet to cover all of the things that are going to need to be taken care of in the commercial space and the residential space and whatnot. Where is that labor going to come from? And then once they get there, where the heck are you going to put them?
That's a very good point. Tim, thank you very, very much. A little
you.
historical perspective here.